Hi, this is Joan Pratt with RE/MAX Professionals. Thank you for watching my video blog. Today's topic we're going to be speaking about everything you need to know about your credit score. But before we get back to our topic, I would like to point out two important buttons right below this video. The first is Instant Valuation. The second one is Search All Homes. Now let's get back to our topic. Can you talk about how your interest rate is affected by your credit?
Yeah, it depends on the type of loan that you're doing that will determine your interest rate. For government loans like FHA and VA, you have to just have the minimum FICO score of 620, and then you get the best rate available. If you do a conventional loan, your rate is going to be tiered based on the FICO score and the loan to value. So the rates go up as your score goes down, if that makes sense.
Yes, that makes sense. So it's in our best interest to have the best credit score possible.
Absolutely. So if I can talk to each of those 5 subjects, I'll kind of explain what you can do to try to help maximize your FICO score when you're thinking about purchasing a home.
That sounds great.
Okay, so the first one is payment history. So obviously, do you pay your credit on time, the length of positive credit history that you have, and the severity and quantity of the delinquencies you have. So obviously, if you just pay your bills on time, you will maximize that one component to your credit score. The next one is the amount owed. Ideally, we want to try to keep our credit balances to 30% of our high credit limit. So, for example, if you had a $10,000 line of credit, you wouldn't want to have more than $3,000 charged on that $10,000 line of credit. That will help to maximize that component of your credit score.
Okay. They want to make sure that you're not maxing out your credit cards and being extended beyond your means.
Okay. The next one is the length of credit history. And this accounts for about 15% of that FICO score. So obviously, the longer the history, the better. And there's a tendency for people, and again, it's just a myth out there, that they should close accounts that they no longer use. And this is not true. If you have a good credit history on a card for several years, just try to use it once a quarter, put a tank of gas on it, keep it active, because that helps keep your credit score elevated.
And so for all the people that decide, oh, I want a new house, but I also want a new car, and I'd like to get this new table at AFW, they probably shouldn't open the department store credit cards for Lowe's or Home Depot right before they're ready to purchase a house either, right?
Yes, that is correct, yes. And actually, that's the 4th component to your credit score. New credit accounts for about 10% of your credit score. So, plenty of research shows that opening several credit accounts in a short period of time doesn't represent greater risk, but it doesn't help you establish that credit history that you need to elevate your score. And the last component to our credit scores is the type of credit that is in use. You want a healthy mix of credit. So the ideal mix, according to the credit bureaus, is that you would have 2 installment loans and 3 revolving accounts with balances. And that revolving is, like your credit cards. And monitor your credit. You can get a free copy of your credit report once a year. If you go to www.annualcreditreport.com, that will give you a copy of your credit report. Just do it once a year just to monitor your credit. And I would say that would be the main points I would say for people to help maximize their FICO score when they're thinking about purchasing a car or a home.
Well, as always, Jennifer, you've been incredibly helpful. Thank you so much for your time today and for all this great food for thought. If you are looking for an amazing mortgage broker to help you purchase your new home, please give Jennifer a call. Her information is at the bottom of the screen right now.
Thank you.